Sidekick Accounting, and it is TaxCon week for me. And so, I secretly like to make myself laugh, and I think I'm a pretty funny person. So, on my way emails this week, I had just kind of retorted or torted, whatever that word is, that, some people go to Comic-Con and, cons that are probably lots of fun. Here I am this week at TaxCon, probably not as exciting, but I'm excited about it because we do taxes for people, for small businesses especially. And, this time of year, there's a lot of things that are changing in anticipation for the new year. And so I'm excited to get to learn more about taxes so that we can continue to help our clients be successful. And so when I was on the call though today, one of the things talking about, or one of the segments on resolution, which basically is just talking about like if you owe money to the IRS, what that looks like for you. And one thing that I thought was really interesting that I had known, but you kind of forget about things after a while, because the taxes are so vast, right? And always changing, which is why I do all this education on a regular annual basis. But anyways, one of the things that they were talking about was if you have a bill prior year, what are you supposed to do? Because sometimes people will bring the bills to resolution accountants and, it'll be for 5 years or even sometimes 8 years ago, like a bill balance that was still from that period of time. And they'll be like, oh, well, I got this bill in the mail and I should pay it. And I got 5 grand, or I got, 10 grand in my retirement savings I can pull out, and then they go and pay it. But the thing is that I get into compliance with taxes, you don't go backwards. You actually start with the current year. And so I thought this was a great tip because, hey, the last couple of years have been rough. If you've been successful and have had a business and didn't really expect to pay taxes, or if it was more, you might have a bill standing out there as well. So one thing to bring it into compliance is to get on a payment plan if you're not already. But the other aspect of it is that there's a statute that there has been no other taken, a bill that goes 10 years actually falls off and they can no longer collect that. So when you want to get into compliance from a tax payment standpoint, the best thing to do is to get current for the current year. So like right now, we got another quarterly estimated tax payment that's due in January for 2022. So if you have money to put towards taxes, put it towards your estimated tax for this current year, and then work backwards from 2021 to 2019. Work that direction, because anything on that end could potentially fall off. That doesn't mean don't pay your taxes, but just kind of as an FYI, like if you have a bill from 2012, 2011, I think is what it would be, that's going to be falling off. So with the current year, to get yourself in compliance, and then you can address whatever's happened in the past. So I thought that was a really great tip and tool for people to understand how to get in compliance, where to put your dollars when it comes to owing money to the IRS. So hopefully that was helpful to you today. I'm going to be doing more videos as I go through TaxCon and learn all this kind of great, cool stuff for you. So make sure you follow, like, and comment and share if you found this useful. So thanks, and I will talk to you soon.